Okay, for this mock exercise, we're going to take a look at job costing. Job costing, and we're going to use the case ABC Industries. And in this question, we're going to do some calculation and, of course, some journal entries as well. So let's take a look at the question. So this question has 3 different jobs. So at the beginning of the accounting period, the accountant of ABC estimated total overhead to be about $80,000. This is the total estimated overhead is allocated to jobs on the basis of direct labor cost. So this is total overhead, and the allocation is direct labor cost. Now we're going to actually revisit this because this is job costing using the traditional method of overhead allocation. So let me write this down here. You got total overhead, and this is estimated. Okay, so this is estimated, not actual, and we're going to apply it based on direct labor cost. So it's going to be a percentage of direct labor cost. The direct labor cost budgeted is $200,000. So we know that the overhead allocation based on direct labor cost is 80 divided by 200, or 40%. Okay? So essentially what we do is when we're costing each job, and this is typically what happens, is let's say we're in a business of making customs order or a custom job, perhaps a wedding cake, or someone who makes dentures for dentists, for example. Those are custom-made items. And what we have to do is we know what our actual cost will be to incur, actual cost incurred to create a product. So materials and labors are often known, but overhead is one of these things where we apply, and we apply a rate. In this case, 40% of total labor actual labor cost will be the representation of overhead. And oftentimes we need to do that because total overhead cost, the actual overhead, is not known until at the end of the year or at the end of the period. So at the end of the period, we've already probably done 5 or 50,000 jobs, and we need to be able to cost out what the overhead rate is applied to the job so that we can always monitor the profitability on a job-by-job basis. What you don't want is you don't want to be able to wait until the end to determine the actual overhead applied to each job, because by then you would not have known whether you priced the products or each job separately or properly with some element of profit. So that's why we're always using estimated overhead divided by, in this case, the estimated or budgeted direct labor cost to determine the overhead allocated based on direct labor. So this is the estimated or budgeted. Sometimes it's called budgeted. Okay? So that's essentially what we're trying to calculate with job costing. Now, we've got 3 jobs. Job 1231, 1232, and 1233. We're given the materials and labor. We're told that 1231 was finished and sold, so this is now part of cost of goods sold. So FG, finished goods to COG. We're told that job 1322 was finished, so this is in our finished goods. And we're told that 1233 is still in work in progress, so that will be in a WIP, stands for work in progress. Now, the actual overhead was actually $82,000. So the estimate was 80, the actual was 82. So the first part of the question is asking us to calculate the cost of each job completed. and then calculate the cost of goods sold, which only be job 1231. So let me write that down. So only for 1231. And we're asked to calculate the amount of overhead applied or underapplied that will be prorated to the ending balances and in work in progress and finished goods and cost of goods sold. So let's do the calculation. So for part A, it's asking us for the total overhead. We already know that the overhead rate, so the estimated overhead allocation or rate equals 40% of direct labor cost. We know that, right? So let's do the math. So I've got job number 1231, so this is job. The second one is 1232 and 1233. I'll put a total column here. So materials for each job that was given to us is 45,000, 70,000, 30,000, and the total of that is 145. Labor, again, given to us, labor cost is 70,000, 90,000, 50,000, and the total of that is 210,000. Now, normally, the estimated overhead allocation or the rate is usually per labor hours or per machine hours. In this question, it's just per direct labor cost. So the overhead is going to be, so for that, let's do for job 1231 is going to be 40% of 70,000, which is 28,000. I'm just going to do the first one. So this one is 28,000. This one is 40% of 90 is 36,000. And 40% of 50 is 20,000. So we're actually applied 84,000. We applied 84,000. That's going to be an important number to think about because we're going to compare that to the actual overhead. And sometimes companies will over-apply or under-apply depending on whether their actual number of, activity is greater or less than what they budgeted at the beginning of the year. So the total cost, this one is 143. This is 196, 100,000, 439. So for part B, it says, what is the cost of goods sold? We only know that it was only job number 1231, so it's 143. That makes sense, right? Now, part B says calculate, part C, says calculate the amount of over and under applied. So the actual overhead we're told was 82,000. What we applied overhead is, in this case, 84,000. So we over applied. Now, the over applied can be recorded in two different, methodology. So it can be all recorded as cost of goods sold at 100%, or they call it a prorated method. And that's in your lecture notes. And that's what we're going to do. So the prorated method is we're going to prorate it based on the ending balances of work in progress, which in this case is which one is work in progress? This one, right? Job 1233. That's 100,000. Finished goods, which is job 1232. and that is 196, and cost of goods sold, which is 1231, and that is 143. That is total 439. We're going to use the percentage. So 100 divided by 439 is 22.78%. This is 44.65%. And this is 32.57%. We're going to multiply this by $2,000, which is what we calculate as to be over applied. Then each one of these will share. So we're going to take, so this is the prorated method. And all cost of goods sold, that means we're all going to book it to cost of goods sold, and none goes to work in progress. So in this case, these would be credited to work in progress. Okay, so let me explain to you how this actually works. So if you think about it, if I do a T account called manufacturing overhead, okay, usually this T account is called a control account. And this account is a temporary account and gets closed out to zero at year end. So we know that's going to go to zero. And normally you would debit actuals on this side. So let's say you incurred rent, and rent is part of the manufacturing facility. You would debit manufacturing overhead control account, and you would credit cash, right? So when you pay your landlord, you would credit actuals on this side. Or let's say you're able to use, in this case, there are some miscellaneous indirect materials that they use to as part of manufacturing overhead. So they're not direct materials; they're indirect materials such as glue, tape, grease for the maintenance of the equipment, for example. So all of those would be actual. So those were actually spent. Now, so that goes on the debit side. Then when we apply, that's on the credit side. So this is the debit. So whenever we use the 40% of direct labor costs, when we apply, we debit the work in progress of all those individual jobs, and we credit the MOH applied. And in this case, what we applied was $84,000. What we actually cost is $82,000. So now you've got this $2,000, right? And it's called over applied. So to able to make this thing go to zero, because we know it's going to be zero at year end, we need to credit $2,000. So in our example, we need to credit. So the first one is options. We're going to credit MOH, control. We debit cost of goods sold. Sorry. I got it backwards, you guys. It's 2,000 over applied on this side. Okay, and then we need to debit 2,000 here to make that go to zero. So we're going to debit MOH control and credit cost of goods sold. Or we debit MOH control, we credit work in progress, and we did calculate those, right? Work in progress 456, credit finished goods, $893, credit cost of goods sold, $651. So that's the prorated method. Okay, so let me recap. So the actuals were 82, we were given that. And the applied is 84, so we end up having a credit balance of 2,000. That means we over applied. The only way to get that down to zeros, we need to debit so that the MOH goes to zero. So we debit MOH control, and then we credit cost of goods sold. Now, I kind of answered, this is really part of part 2 to the required, and it says, prepare the journal entries for all of these, and that's really what I've done here, over the under applied. So let's just do that anyway. So the journal entries are, we're going to debit, the first one we're going to debit is, we're going to debit work in progress, 145,000, which would be all the materials that we spent, 145. And credit raw materials inventory. Because presumably you bought a whole bunch and now you're taking it out of your raw materials to use for each job. Second is we need to debit work in progress. In this case, the labor cost, and credit either wages payable or cash. Okay, and that's the 210 right here. Now, for the overhead, we're going to debit actuals. So this is the actuals, right? Debit MOH control account, $82,000, and we're going to credit either cash or various payables, or let's say a cumulative amortization, for example, because the depreciation of that manufacturing facility would be debited to MOH. And then when we applied, so this is the actuals, we applied, we're going to credit MOH, and that was 84,000, and debit work in progress. Now we know that we only sold one item, which is job number. So you know what? Let's move it from work in progress and debit finished goods. So let's do it in 2 steps. And this would be for jobs. What did we say it was again? We said it was for jobs 1231 and 1232. So 1231 and 1232, and that would be the sum of both of them, which is 143 and 196. So this is debit 339 and credit 339. And one of them was sold. So debit cost of goods sold for job 1231, which is the 143. Credit finished goods. Okay, and then the last part was that overhead, and that's what we just did here. So debit, so this is really part 5. Okay, so why don't we just do a quick recap of job order costing, and then the quick recap will help you better understand this job over costing and the MOH. So under this particular mock exercise, we learned that under job costing, first, when we buy the raw materials, we debit the actual purchases to the raw materials inventory, and as soon as we use part of that raw material, we're going to credit the raw materials and debit work in progress, or we credit raw materials for indirect materials, and we put it to MOH as actual. So this would be things like grease and cloth, or anything that deals with maintaining the equipment, or any supplies that they need, not particularly to a job. Now, in terms of wages, you'll see that when you have actual wages, you either credit wages payable or credit cash, and you would debit the work in progress. The work in progress, I want you to imagine this T account to be one T account for every job. So in our example, we had jobs 1231, 1232, 1233. Each of those jobs would have a separate T account. And here we would credit wages payable, and we would debit each of the particular job. Now, there are also going to be indirect labor, such as maybe the supervisor cost, who supervises multiple jobs, and they would be allocated to MOH. Now, there will be other overhead actuals. So these are actuals. So such as light, heat, and water, those are actual costs. But of course, we would use the applied. So this is the applied work in progress. And the applied is going to be based on some sort of, an allocation methodology. And the one that we did in this example, was a percentage of labor cost. So that's what we do. So once we accumulate all that, what happens is once the job is done, we're going to add all that up, and we're going to move this out of cost of goods sold, so this is now 0, to the finished goods. So once it goes to the finished goods, so this now goes to 0, because it's done, the work is done, it goes to the finished goods, and once it's sold, it gets out of finished goods into the cost of goods sold, and then you reflect the revenue. That's essentially the journal entries that we just did in that second part of the required. Now, in terms of the allocation, you'll see that the manufacturing overhead is applied to the jobs, and right, because we need to be able to allocate a full cost. It's part and parcel with a requirement for two things. One is we need to know what our profitability for each job, so we need to know the full cost. But more importantly, when we're actually doing financial statement reporting under GAAP, we need to be able to value the cost of the unfinished goods or finished goods in inventory. So here, the allocation base, in our example for ABC, it was based on percentage of labor costs. But it could be direct labor hours. This is the one that we use for ABC. It could be machine hours. And it's used to assign the manufacturing overheads to individual jobs. And here you'll see that it is impossible or difficult to trace overhead to a particular job. That's why we allocate it based on a per unit or per dollar amount. And the overhead, manufacturing overhead, consists of many different items. So that's why it makes sense to accumulate them all and use one rate to apply them. Now, when we apply them, we're going to use based on what we call normal costing. And what is normal costing? So I have here a comparison between normal and actual. In actual costing, you're going to look at all of your direct costs. So this will be your direct material, direct labor. You're going to use actual costs. In normal costing, that's also the same. So just like we did on that job, we costed each job based on actuals for direct material, direct labor. But for indirect costs, such as manufacturing overhead, we're going to use an estimated rate based on a budgeted estimated number of total overheads divided by, in our case, it's either budgeted machine hour, budgeted labor hours, and in ABC's case, it would be budgeted labor cost. So that gave us a rate times the actual usage of that cost allocation base. So that's what normal costing is, whereas actual costing, we use actuals. Okay? Now, what we saw in that case is that we applied, right, the first method of applying the over and under apply, we saw that is we said we're going to push it all to cost of goods sold. And in our case, what we applied is more than what we actually cost, just like ABC. So we took that $30,000 and we debited cost of goods. We debited manufacturing overhead to make this go to zero, and we credited cost of goods sold. Or the second method is to do the proration method by taking a look at the values of work in progress, finished and cost of goods, just like we did with ABC. Use the percentage and then allocate that $30,000, and that's the entry that we did for ABC. Okay? Thank you.